Should I buy a property for investments? And what is the steps for me to do this in my 20s or 30s? As a business owner, should I use debt to grow the business? One of the big reasons people run out of business is cash flow. We help business owners manage the cash flow, just showing them what to do. I would say if you're a business owner, if you have net assets of, $1 million, $2 million, you want to get a prenup. There's nothing wrong in protecting yourself. Okay, so in this episode, I'm going to be answering a few questions. Okay, and these are questions that will come from people, and obviously questions that I think I should just let people know as well. So the first question is, my mom says I should put money into super. So how much should I put in so I can live comfortably when I am 80? Okay, so my first question I would ask this person is, how old are you? So if you're in your 30s, I would get you to consider putting nothing into super. Okay. And the reason for that is when you're in your 30s, right, you're speaking to your parents who are probably in their 70s or 80s or even 60s. And there was no super at that time for them. So naturally, their advice to you, which is coming from a great place, is saying put money in super so you have enough. However, if you keep working from your 30s to actually when you get to your 60s and earn an average income, you would have a few $1 million in your super. Okay, so each time we model this out, generally that's what we see. So for someone in their 30s, I'll say, look, I think lots of life issues will come up before then. Paying for your wedding, if you want to get married, buying your first home, enjoying life, before you actually get to your 80s. So I would say consider putting nothing in. However, I have sat down with some people where it made sense. So it's very dependent, but I'll say about 5% of the people should put something in their 30s. The other 95%, don't worry about it. Okay, so same question. If you're in your 40s now, okay, yeah, so this is where things start to really get interesting, because in your 40s, it's almost that prime time where you need to do the best you can now and then in the future as well. So, you might still have a huge mortgage. You might have kids who you're paying education for. And then you might not have a big super compared to, someone in your 30s now in 10 years time. So with that in mind, I would say it's a balancing act where you might want to put something, okay, in there. But it comes down to what your lifestyle is at that point in time and if you're comfortable with that. Because if you're struggling to pay school fees for the kids and struggling to be on top of the mortgage, there's no capacity to put money into super, So I'll say then it really depends. So, but for that age group, kids, big mortgage, I'll say definitely focus on that because there'll be opportunities to put money into super later. Now, if you're in your 50s, okay, to me now in your 50s, that is prime time, go time. You need to be putting some money into your super because you're very close to stopping, you're very close to retiring and not working again. And what happens at that point in time is you don't get too many opportunities to save the taxes that you have lost. So in your 50s, to me, you should have really drilled down and paid off the mortgage. The kids should be out of the house. And if you're not out, maybe kick them out if they're old enough. If they're not, please allow them to stay. And so then is really putting a lot in super because things like early inheritance for the kids, things can be done after you retire, which is, 10, 15 years away. So to me, in your 50s, that is the one time you should take mom's advice and definitely put some money into your super. So that was one question. The other question we got as well is, do banks look at my Uber Eats when I want to get a loan? And what would make me more favorable for a home loan? So this is a very good question. This is more mortgage broking centric, but I can give you some tips around that. So generally, the banks would just look at what you're spending in general. So let's assume you're not the kind of person that would go out and, spend a lot on a night out or spend a lot on expensive dinners. So you're living within your means, but having lots of Uber Eats, go for it. Have as much Uber Eats as you want. However, if you're then the kind of person that, okay, well, you want to travel, you want to have nice dinners with your friends, and then you want to Uber Eats and you're not saving money, the banks will look at that. But it's not because of just your Uber Eats. It's just because, you're not saving more than you should. So in terms of that, it's not really the Uber Eats, but more about your overall savings. And what will make the banks look at you very favorable is just your ability to save, So let's assume your income is $5,000 a fortnight, a month, whatever it is, and you're able to put aside, 10 to 20% of that. That's amazing. Banks will love that because they'll be like, yep, you can save. And yes, we're happy to give you a loan because we know you would pay that loan. But if they see that, okay, well, you're not saving anything and you're spending all that money on Uber Eats, unfortunately, you would not be looked at favorably. So I hope that answers that question. So now the next question we got as well is, should I buy a property for investments? And what is the steps for me to do this in my 20s or 30s? Okay, so I like this question because, look, one, I love property. And yes, even as a financial advisor, I think investments and shares and all that actually give you a better return long term if they're not geared. But the good thing about property is the gearing. What that means is you only put about 10-20% of the deposit and the bank gives you the other 80%. So literally you are amplifying your initial deposit by 4 to 5 times. So that's gearing. So I love property in that regard because, look, you can work well for even the young people. And generally with property as well, people will pay off their mortgage before they go get some Uber Eats, okay? Because they don't want the banks bogging them. So in terms of in your 20s and 30s, look, it's just saving towards the deposit. And going back to what I've said before now is ensuring you put in a certain amount to have that deposit. What I've seen with some people as well is you're chasing the property market from time to time because you're trying to get to 20% deposit. In this age, it might be very hard for a young person, 20s, 30s, where you haven't reached your peak earnings yet to save enough to get to 20-30%. So, you can consider just going even 5% and paying the LMI because now you're not chasing the property again. You're more chasing your mortgage repayments and everything else. So definitely a strong thing, a strong point there to consider. This is probably where I'll do a plug, but if you sit down with someone like myself, we can actually guide you as to what should be done. But I am of the opinion that if you need to pay LMI to get into an investment property and it's your first one and you're going to be diligent about reducing that and growing your wealth long term, I don't think is a bad idea. So definitely something to consider for those of you in your 20s and 30s thinking about property. And the next question I had as well is, as a business owner, should I use debt to grow the business? And my answer to that is yes. Okay. Remember, this is general advice. I don't know your situation, but generally, as a business owner, yes, you want to use debt. And the reason behind using debt as well is because your business can give you returns of, say, 10, 20, 30, even 50% year on year. But the repayments you're paying on the debt is probably 5 to 10% max. So as long as your business growth is more than the repayments you're having on the loan and you're using the amount you borrowed for something to grow the business, to me, that's a no-brainer. You should do it. However, you want to manage that properly because one of the big reasons people run out of business is cash flow. Not really because the business isn't making money, because your business can be growing 50%. But if that cash is not flowing in and you're retaining a lot, you're going to run out of business regardless of what you're earning. So that's the key point. But should you be using debt? Yes, to me, it's a no-brainer. You just do it because it helps you grow, but ensure your cash flow is fully in, you ensure your cash flow is prime and you're managing it properly. Look, we help business owners manage the cash flow, just showing them what to do because we understand it and we just know how much that can make in terms of surviving and just thriving long term. Okay, so the last question I have, I've got into is a controversial one, but look, why we're not going to shy away from controversial questions. I think is quite important for people to know. So the one is, what is my opinion, and please just my opinion, on pre-nups and post-nups? Okay, so because look, it affects finances and facing facts, 50% of people get married and then get divorced. Okay, so it's just life. So my opinion on prenups is get one. Get it. Hopefully the other person understands why you're getting one, but you should get one. I think the way you address it is more important than if you get it or not. because the way you address it can make the other person feel very comfortable as to what's going on. However, I would say if you're a business owner, if you have net assets of, $1 million, $2 million, you want to get a prenup. There's nothing wrong in protecting yourself, and there's nothing wrong in ensuring that if a marriage or a relationship breaks down after a few years, you can work and keep your hard-earned money, and so should they. So if you're on the receiving side of this as well, please, I don't think it should be seen as a personal attack. It should just be, look, they want to protect your money and you're with them, not for your money. So you should get a prenup. And please, this is my opinion, and I strongly support people who want to get it, talk about it early on, so it's not just sprung on someone. I think the post-nups, the ones that are done within marriage, can be a lot harder, okay? Because then it's like, well, I've been with this person for a while, and then you want a post-nup. So in my opinion, the prenups make sense. So I hope you've enjoyed today's episodes and the questions. So please share with anyone who you think would want to hear this, and then reach out to myself if you need help with your finances.